Welcome to Illuminati Silver. We tell you the truth about silver. Today is Saturday the 19th of March 2022 and we're publishing our gold and silver weekly update for the week ending the 18th of March. It's been a relatively dramatic week, particularly with the interest rate decision on Wednesday. So let's take a look as to what has happened and what we envisage will happen in the week ahead. Now first, before we look at prices, just a quick shout out that on Thursday we published a video entitled Gold and Silver Rise After Interest Rate Increase. Because we initially saw on Wednesday gold and silver prices dip quite dramatically, but then recover somewhat again. Still down overall from the week, which we'll discover in a moment, but nevertheless, those changes are pertinent, and we covered in that video really the details of what Jerome Powell, the Federal Reserve, actually stated. And we're not going to repeat all of that again today, so if you haven't listened to that video, please go to the link and do so. Meanwhile, let's look at precious metal prices. Now, gold fell $66 last week, falling from $1,988 to $1,922, having hit a high of $1,990 and a low of $1,895, a fall of just about 3.4%. In sterling terms, gold finished the week at £1,458, that's down £66 an ounce, and in euros it closed at €1,738, that's down €83. Now silver fell 89 cents, falling from $25.88 to $24.99, having hit a high of $25.96 and a low of $24.51, a fall just above 3.4%. In sterling terms, silver closed at £18.96, that's down 89 pence, and in euros it closed at €22.59, that's down over a euro at €1.13. The gold to silver ratio fell slightly from 77.2 to 76.9 to 1. Bitcoin has risen $2,500 and currently stands at $41,702. Now let's take a look at the equity markets because they've performed extremely well. The Dow Jones closed on Friday at 34,754. That was up 274 points on Friday, but also up 1,810 points on the week. The S&P 500 closed at 4,463. That's up 51 points on the day and 259 points on the week. And the Nasdaq Composite closed at 13,893. That's up 279 points on the day and up 1,050 points on the week. So we cannot write off equities totally. We still have concerns about them. We admit that quite openly. And this is just a mild recovery compared to the recent falls. Of course, whether the economy moves into recession or not is also going to some extent dictate where equity prices move. Now oil's moving in the right direction but still too high. Brent crude closed at $107.93, down $4.74, and WTI crude closed at $104, that's down $4.63 a week. So that's a 2-week reduction of at least $10 for both. But we have to consider how high they have ultimately reached. Now the dollar index stands at 98.23. That's down 0.89 on the week. It didn't quite reach 100. We thought it might. Didn't quite get there, but it was pretty darned close. Now we concluded last week's video with the following forecast. Quote, we see gold trading between 1920 and 2020 with 1880 and 2070 as outliers. We see silver trading between $25 and $27 and $24 to $27.50 as outliers. Well, both gold and silver operated within our normal range for the week, save 1 cent, with gold temporarily moving into the outlier range to the downside, but quickly recovered. The difference between gold's high and low was $95, and for silver it was $1.45, higher than the normal disparity between highs and lows, but lower than the previous week's differences. Now, in our video published Thursday, to which I've already mentioned, we've placed a link below, we highlighted what the FOMC and Jerome Powell, the Fed chair, declared was their interest rate plan for 2022 and likely target for 2023, with interest rates expected to rise most meetings this year and concluding the year at or around 2%. Some analysts think it may very well be slightly less than that. We'll wait and see. Now, with inflation running around the 7% mark, and even though it may be due to fall, it's difficult to see how even a 2% interest rate or a 3% rate, if that does occur by the end of 2023, will bring inflation down to the Fed's medium-term target of 2%. We suggest and suspect that the 2% figure will not be reached for some time. Nevertheless, this is the plan they're sticking to. There was a fair amount also of interesting data published last week, which in reality was overwhelmed by the Fed's interest rate announcement. For example, the Empire State Manufacturing Index for March came in at a minus 11.8, compared with expectations of a plus 5.5. Retail sales figures for February were down dramatically, coming in at a positive 0.3%, compared with a positive 4.9% in January and against expectations of 0.4%. On the jobs front, it was better news. Jobless claims were lower at 214,000, and so were continuing jobless claims at 1.42 million, which is why Jerome Powell stated that the jobs market was running hot. So let's take a look at this coming week. Monday, we have the Chicago Fed National Activity Index for February. Didn't even know that existed at one point. Tuesday, nothing scheduled. On Wednesday, new home sales for February. On Thursday, we have the weekly jobless claims, durable goods orders for Feb, current account deficit for quarter 4, the market manufacturing and services flash PMIs for March, which are always a good indicator. And then on Friday, we have the UMich Consumer Sentiment Index for March, 5-year inflation expectations for a rolling period of March, and pending home sales index for February. So Thursday is really the main day to watch next week. So what is gold looking like technically, I hear you ask? Well, we have resistance at the 10-day moving average of 1968 and support at the 50-day moving average of 1868. The MACD suggests a sell signal. Silver, meanwhile, has support at the 200-day moving average of just above $24 and resistance at the 10-day moving average of 25.50. The fast stochastic and MACDs suggest lower prices ahead. So at least from the technical perspective, we're to expect lower prices. And frankly, unless something happens geopolitically, we'd probably tend to agree. But we have to put this into context. What is affecting prices most currently is clearly the Russia-Ukraine conflict and the global reaction to it. All things being equal, had this conflict not occurred, we suggest we may very well be looking at $1,700 to $1,750 gold and $20 to $22 silver, as clearly the hawkish stance portrayed by the Fed this past week and inflation really getting out of control would certainly have dampened gold and silver's rise because of the prospect of rising interest rates increasing. There's still a fair amount of risk purchasing going on, and we're seeing the physical being bought up at a very healthy rate, which is why there are not necessarily shortages but delays in postages at a number of dealers. That said, short term, the paper markets dominate the price, and that applies when prices go up and when they go down. Now, our fear is that Putin will double down as he continually boxes himself in, and the West embarks on what we call a verbal path of let's see regime change in Russia. If that happens, then prices will go ballistic. On the other hand, if a settlement can be reached, we're not overconfident that it can short term, but never say never, then a 5 to 10% risk-off divestment could very well occur, and quickly. That's divestment of gold and silver. This therefore makes predictions extremely difficult, as both potentialities are pointing to relatively extreme price movements in either direction. With these two caveats in place, and assuming some but no dramatic geopolitical change, We really see gold trading between this 1850 and 1975 level, but perhaps sort of moving towards the early 1900s, late 1800s generally. But as a safety measure, we have 1800 to 2000 as outliers, allowing for some major news that perhaps is not foreseen at the moment. We see silver trading between 24 and 26, but potentially as outliers 23 to the downside and 27 to the upside. What are your thoughts? Do you agree with our estimates? How do you think the Russian-Ukraine situation will pan out? Please share those thoughts, but meanwhile, by all means, we'd appreciate a thumbs up to this video. But even if you cannot quite bring yourself to do that, at least make sure you've subscribed and pressed the bell sign and had a look at the video we produced on Thursday. Thank you for listening. As always, have a safe, enjoyable weekend and prosperous week ahead. Illuminati silver owners come from a background of banking, international wealth management and economics. Having now retired from these worlds, we are not qualified to give investment advice. Therefore, this and other productions must not be deemed to be giving such advice and merely represent the personal views of its owners.